RBA rate cut. Should I wait for better borrowing conditions, or is now the right time to buy?
Early movers always benefit the most from every cycle. So waiting, you're just going to miss part of the growth curve. Who cares about your interest rate? If you can get the loan, you go it. The biggest question is your budget going to be big enough to buy what you want? If not, that's when you wait. We started residential, so I'm never going to stay on one strategy forever because that's pig-headed of me. You got to go where the opportunities are.
I love my job.
Yeah,
it's good.
Why?
Because I'm
sure it's not working with Scott either. But, Okay, how you going? Welcome to Inside Commercial Property with the crew over at Rethink Investing. I'm Phil Tarrant, your co-host, joined by Scott O'Neill, founder of Rethink Group. How you going? You well?
Good, mate. Good. Another month. Here we are.
Another month.
2025.
Who would have thought?
Yeah, it's got a good buzz to it this year, though, doesn't it?
Well, everyone's back into it and talking about what the year's going to look. And we saw only a week or so ago, interest rate announcement that a lot of people were pretty happy with. We've spoken about this beforehand. We were a bit sort of like, if it happens, it happens. If it doesn't, it doesn't.
Yeah.
Probably better for higher interest rates to stay around longer for focused property investors. But this is the market that we operate within.
I know. And we've seen it in New Zealand, like on the commercial market over there, they've had 1.75% of cuts now. And the prices are changing pretty quick. The resi market's slower to react because there's a bit more hurt. They're less sensitive to interest rates, but yeah, the prices are going up straight up. And you'd think the same's going to happen here. So I would have hoped from a buyer's agent perspective that rates didn't go down, but from a personal portfolio, obviously it's a lot better. And the ASX is predicting by December 2025, the central bank's going to have a 3.65% interest rate. So if you kind of extrapolate that out, we're mid 5% commercial loan by the end of the year. If that happens or not, it's more just the trend, as we always say. So that will definitely compress yield if rates go back down to that level.
Which is good for people holding property, particularly with a lot of debt. There's a lot of noise around resi banks and how they're responding to interest rates. With most of the banks and lenders are saying they're going to pass on the full 25 basis points for new business. I'm still yet to see exactly how it's going to play out for a lot of existing customers. They're saying they're going to pass on existing customers, but I reckon there'll be some sort of question marks around aspects of that. What happens inside of commercial? Can I expect my commercial loans to come back in line with sort of resi stuff?
Yeah, definitely. I think if anything, it's more competitive. Banks are going for market share quite aggressively at the moment. So it's a good time to refinance or even wait a little bit longer for, maybe another rate cut to happen. But most people will be manipulating their loans somehow this year. You'd be silly not to. There's going to be some deals around, some opportunity to maybe get some equity out. It's a good time to talk to your mortgage broker and do something. And just make decisions on your bank loans and hence property ownership.
So we'll talk about acquisitions in a moment. We're going to introduce in one of your team members to have a bit of a chat with us that specialises and operates in that space. I don't think you do much of that these days, do you? The actual buying? You mainly podcast these days?
To be honest, it's a big part of my job still. Yeah, I love being close to it. I always thought the minute I get off the tools from a negotiation sense, I'm going to be pretty useless on this podcast. So you need to know what's going on. That's the quickest way to understand the market, by just being in it. And that's the great thing about being a buyer's agent. I know exactly what's happening in the market just due to clients purchasing. And obviously we've got thousands of examples of deals already out in the market, and you find out what's happening with releasing and, different parts of the country. So yeah, if anything, I feel I've got one of the best feels of the national market out of anyone in the country due to the volume.
Because you're doing deals, right? If you're doing deals, that means on a daily basis, you're getting situational awareness about all the markets that you're working in. How would you sort of frame the market at the moment? If you've got to give us a quick sort of paragraph on, tell me about commercial property as of the end of February, early March.
Super broad question. But look, if you break it into price segments, your sub $2 million market's extremely difficult. Stock it's existing, but it's almost not existing. It's so tight. We've mentioned in a couple of previous podcasts, you've got the swell of new buyers agents coming in from the residential division trying to have a dabble and they're all going to be fighting over the mostly sub $1 million stock, and that's going to price in extra risk because they're going to pay more and more just to get their clients into deals. Also, thousands of individuals out there buying regularly. We can use some examples of what we've seen in the market where people are just way overpaying on a little deal just because they're sick of missing out on 3 in a row. They're just buying it to get in, and they might pay 10% overs or 20% overs and not even know it. That's the risky part of the market. So, as a company, we try to take our time in that space, and that obviously creates wait lists and stress points for us. But we rather make someone wait than get them into a deal for more money. So that's the sub $2 million mark. It's pretty tight in everything, even office, industrials, white hot, retail's coming up pretty strong next to it. Medical, same as industrial, just 10 out of 10 in terms of the surge of people buying into it. The $2 to $4 million, that's kind of a very, very busy part of the market for us. It's where we do the majority of our deals. We see lots of good deals in that range, but you've got to move quick for the right deal because there's backup buyers. The agents know they can sell any good deal on the market for that price point. That's where office might be a bit weaker compared to retail and industrial. Medical is again, very strong, or specialty. They're all growing at the moment because especially with the interest rate pattern, that's going to be pushing more people to pay more. Effectively, lending is easier. And it's been 2 years of very tough lending conditions now. So that's coming out the other end. We've mentioned in previous podcasts, there's 1 million extra people in the country. Over the next 3 years, they're predicting 1.7 million new people as well in terms of total population growth. So not new people, total growth in terms of people in the country. So that's going to put stress on existing infrastructure, properties, including commercial properties, and they're not building enough of it. And, retail, that's why I said at the start of the year, that'll be probably the number one market because they're building at 21% of their 10-year average in terms of supply. You've got all these new people there, but we're not building shops or anything that for this new population surge that's happening. So it's a good space to be in. We'll talk about retail more later. The 4 to call it 10 million range, that's another area as a company we're very busy in. Industrials, you're looking pretty sharp yields, high growth rates. The rental market's strong still, but weakening due to developers focusing more of their attention on that segment of the market because they're pricing in future growth. It's a simpler build. There's more margin in industrial as a developer compared to any other asset class now. So you'll see more supply in that market come. Retail, 21% of 10-year average, so no supply essentially. So that will create tightening vacancy rates in time, pushing rents up. As rents grow, yields get better. Investors will chase that because of the growth. And office, they're not going to be building much except for premium stock.
Yeah.
But that's a different conversation.
So there's lots of moving parts there. And just to drill down on the sort of more affordable part of the market, sort of sub $1.5 million. And whether it's as a result of this podcast, but there seems to be a lot more buyers agents operating in that space. And we've spoken about beforehand that people are probably fast forwarding their pivoting to commercial sooner than traditionally what they have done because of the education that's out there right now and the greater awareness around the benefits of building out a portfolio that includes commercial stock. That's just going to get more and more compressed and more competitive. Yeah. So the question I have is now structurally, do you want to move into commercial too soon because you're competing with a lot more people in markets which are under pressure and the yields are being squeezed? You probably want to wait it out to sort of shift yourself into that 2 to 4 or 4+ million stuff as the right time strategically to buy.
It's a great point you raise. You can go either way. Look, if you've got the money and the capital, yes, commercial makes more sense. There's a reason why people are trying to get into it. It's the right thing to do mathematically. You've got to move into that if you plan to retire. You can't do it on residential efficiently. And with the price has gone up, obviously the laws and the potential risks with governments changing policies on us. Yeah, it's all sorts of mess and risk that you need to price into residential. But it's going to have more of a place in those price points than ever before because, when we started this podcast, you could slip into a $500,000 warehouse in Brisbane. Those are now worth 1.2 in 5 years. They've more than doubled. So that is now a very sharp yield. Where's it going to go from there? It's probably not going to grow at the same rate. We're going to see growth rates stronger at higher price points because yields are still good. So there's a bit more room for yield compression. The lower price points, they already had yield compression. There's nowhere for it to go except for long-term trend rental growth. And then you're dealing with smaller tenants. The risk isn't really priced in from a commercial sense. The more, I guess, the potential upside is, as you mentioned, a lot of more commercial buyers agents come into the space, which I welcome because the more awareness to this, it is going to be better for a company like myself because people will flow towards more experience and more people need to know about commercial anyway. So the more the better. Bring it on. And I'm very happy for that to happen, but they could compress yields to a point where you might even get more growth, but then it's going to be very top heavy. If you buy something at a 5% yield in Brisbane and cap rate, and then it's selling at 4% in 3 years' time, 4% yield, like no one's going to make money off that. But there is that sugar hit for that 20% yield compression you've got. So depending on how aggressive it is, there is short-term benefits, but then long-term risk. So resi is probably more important.
Yeah. Do you find your client base now is naturally gravitating towards those higher value properties, sort of above $1.5-2 million? It's just inherently the way it's working?
Yeah, well, I'm always a flexible business owner. We started residential, so I'm never going to stay on one strategy forever because that's pig-headed of me. You got to go where the opportunities are. I'm trying to move the business away from that entry-level price point due to the risk and the less upside there is. Let someone else play with that. We've already done that for 5 years, 6, 7 years, and I don't want to compete in that space now because we're not going to make as much money for clients in that space. We need to then push them to higher price points or back into residential options where you can still get quick growth, lower risk. Buy a couple of resis for $700,000, let them grow for a few years, pull the equity out of them, or sell one, refinance one, and then pull a $500,000 deposit into wherever the best market is at that time. That's what we move. But we're sort of we do a lot of high net worth purchases. It's where we are making the most money for clients as a percentage. So in 5 years' time, it might be back the other way. The market might crash and then it's cheap and the entry-level price points. We're going to be the first ones to smash that market when the opportunity
But you'll
is there.
spot it first, back to your point, because you're doing so many deals. You see things move quickly and little shades of incremental changes to you will telegraph opportunities, no doubt.
And I see what the industry is doing. And I think because of how tight the residential market's got, a lot of them are looking for yield and they're all going into the unit block.
Yeah.
You may remember when we first met, I was buying unit blocks.
Yeah.
But that's when they were 10 to 12% yields, gross yields. And then you take all the net figures out and you might be sitting on 6, 7% net. They're now buying those things at 6% gross. That's just a bad deal. But everyone's running a few years behind, but they're trying to solve a problem which commercial fixes, but you just need the budget more than ever because of the volume of people and the lack of stock. So, it's not doom and gloom. It's just, it's not as easy in the lower price points. And that's just the reality of the market. So maybe resi makes more sense.
Yeah. And this is the sequence for all property investors. They've got to try and navigate. There's going to be the right time to be doing the right thing. And you might be priced out of good commercial at the moment, but, if you focus on generating equity growth through resi, you can shift yourself up a bracket above that $2 million pretty quickly.
Exactly. Right? Yeah. Even anyone that has a few resi, sit on those for a few years, you got a commercial deposit there. Unless the markets have done nothing, you're going to be sitting on money. So
let's talk dough really quickly. And if you want to get in above sort of that $2 to $4 million, let's call a $3 million commercial purchase, which is probably some good stuff around. It'll be some multi-tenant stuff or large sheds. How much dough do you need to get into that?
Oh, you'd be looking 30% plus costs. So 35% of whatever the budget you're going for is. So, there's very good deals around 1.5 to 1.8. Like that's a very busy spot for us. It's just, look, we're just trying to get people out of the sub-$1 million market. That's the reality of where we're at as a company. Doesn't mean we're not doing deals there. We're regularly doing deals in that space, but there's just not enough of them for the volume of people. So as a company, we can't advocate by those price points because you're simply not going to satisfy the demand and people are disappointed. That's where the wait list comes with our company. We're not proud of the wait list, but it's the reality of the market and there's no solution to that wait list. You can go anywhere else. It's the same stock. We've got buyers advocates in every corner of the country looking for this stuff. The only way that you're going to get ahead of the vast or another company is pay more. And that's your shortcut, pay more.
Well, I guess one of the ways around it, and I know you guys invest in it a lot, is to get the right people on the ground doing the acquisition side of things. One of them is Krystal, from what I understand. Welcome to the show, Krystal.
Thank you.
So you're in some ways the solution to all of these challenges around finding good stock. That's what you do?
Yes, day in, day out.
I'm just trying to job description. Is that pretty much it? Yeah.
Yeah, way too much of it. As a previous example, actually, it happened about 2 weeks ago. There was a property that I was negotiating on and I ended up just walking away from it because there was another buyer's agent who was also trying to compete against me. He paid way too much money and I actually found out 1 week later that the valuation didn't stack, and that poor buyer who trusted that other party just lost out completely. And the property came straight back to me at exactly the price that I said.
Okay.
So,
And you bought it at that price?
yeah, we're about to go under contract on it.
Okay. There you go.
But yeah, just it's probably one small example of, I guess, the value.
Well, the thing with commercial property, from what I understand, it's often easier to determine the value of something mechanically than what you probably do inside a resi.
Yeah, well, there's a lot of different metrics. So location, what the tenant covenants, proximity to different amenities. Does that tenant fit there? What are the current, the rents per square metre? How long have they been there for? There's so many different things that come into actually how I price a property. And that's always changing depending on the market, the location, different states. WA, when you're looking at pricing, is very different from when you do that in Queensland, for example. Same with New South Wales, Victoria, Tasmania. And there's not one shoe that fits all. You have to be very knowledgeable and you have to know what you're always looking for to, and just apply. Like with this interest rate cut, for example, we're going to have to be shifting all the metrics that would usually apply. Yeah. And you just have to adapt and you just have to be on the ground and know exactly what to do, what's going on, say no when you shouldn't be doing a certain price. And
I guess that's probably one of the critical aspects of your role, is knowing when to say no.
Yes.
How'd you end up at Rethink? What's the backstory?
So before Rethink, I was working for a smaller boutique commercial buyers agency, and I was getting a lot of property in stock, and I wanted more buyers to be able to sell it to. So then I approached Scott, and here I am today. Yeah, been in for about 3 years now. Okay. Prior to that, I was in commercial finance and business lending. So that's where the foundation of my commercial knowledge probably stems from. I did that for years, and I remember I was just doing so many loans and working with banks, and I used to love, this is very corny, but I used to love looking at leases, and I used to just dissect them all and try and understand everything about, there's so many different types of commercial leases. So then from that, I had a bit more interest in the property side, and here I am.
Here you are, 3 years in.
Love looking at leases, as you.
And that's like when Krystal was asking for a job. I get lots of LinkedIn messages, and what stood out with Krystal was the lending experience. So she's technically very strong. She loves looking at, the 50 pages into a lease and reading a loan doc. Very, very particular. But that combination of having that experience with valuers, she's good at problem solving. So when a deal's kind of, got issues because of a lease or whatever, you can troubleshoot through the banks and find out lending restrictions are a big thing that come up. And there's always a bank that's got a different angle. So sometimes you're doing the lender's job if they're using a third-party inexperienced
and even
resi lender.
Valuations. If there's a short valuation and you've done this, can you have a look at this and let me know what you think? So I'd have a look and be like, I think there's a mistake here, or, there's so many different things that you need to look at. And,
You enjoy the job?
I love my job.
Yeah.
It's good.
Why?
Because there's a few different
I'm sure it's
reasons.
not working with Scott either. But,
a few different reasons. I guess I like having my finger on the pulse with commercial so much. So if you were to sit next to me on a plane, for example, and just pin me with questions, I could go on for days. And I love having that knowledge, and always, I guess I'm just always learning, which is...
That actually did happen too. You were sitting next to a JLL agent, happened to start talking about commercial property. Next minute, there's a deal on my desk.
And $20 million industrial is a good one.
This is the point, right? So that's a true, genuine sort of relationship-based acquisition, right?
Yeah.
That's the secret to the job.
It really is. And that's probably one of the, I guess, second most important things of my role. So being able to identify certain properties that are good or not good, what price points, but it's also and this has taken a lot of years to get to this position as well.
And commercial property is really interesting because there's a lot more investors being attracted to it, but I think also there's a lot more professionals being attracted into commercial property outside of maybe just down a traditional resi route. And I've seen in your business, you've seen your business grow and evolve for many years. You've got a really vibrant, diverse team, and the unsung heroes, your business, the women in it. That's been my experience, and I'm very conscious that commercial property is dominated by men, or what you see at least on social media. Two guys talking about property all the time. So thanks for bringing Krystal in to actually. This is the engine room of where commercial property happens, and, the talent that you have. And I know International Women's Day is just around the corner, but I think the industry needs to be doing a lot more because it's really underweight you guys are oversubscribed, but it's really underweight in terms of attracting greater talent into it, and that's the females.
Yeah, I mean, I'm shocked how limited it is in terms of, I don't know many female sales
I only
agents.
know of two
sales agents.
Yeah, alone, and let alone female buyers agents. I only know of, and I'm sure there's more, but I would say 2 or 3 that I've ever come into contact with across the country. There would be a lot more, of course, but then let alone female buyers agents.
You said they bring a lot to the table. It's a different negotiation style, and yeah,
it is very
I
different.
think that if you do it well, there's a gap in the market. So anyone that numbers somewhat or negotiating deals, look into the commercial space.
It's changing rapidly, and we see it from the investor side, and it's expanding and evolving quickly. And I see a lot of real estate in general. Resi real estate is really dominated by females. Female agents and property managers. So I predict a shift over time where you see a lot of agents now becoming buyers agents, and rather than just looking at resi, property, you should be thinking about commercial. So if anyone wants to send you a LinkedIn, you still get them saying, "Hey, can I have a job?" Is that cool?
Yeah, just info@rethinkinvesting.com.
There you go. It's not a recruitment play, but
we're talking 3 years ago now.
Yeah, no, it's but it's really good to see, and I think your skill sets evolved over time, and your experience having a myriad of different professional lives to where you are now, thriving in the environment where you can provide great value to your clients and your customers, and getting sort of behind, the secrets or what is really the capabilities of acquisitions inside of a Rethink Investing and securing high performing assets. It's art and science. You would probably rely heavily on your instincts to get a feel for something before you go, okay, it's time to look into this. I know you guys probably have your own language. I don't know how it all works.
Very much so. I rely on, looking at this, there's so many different things that could apply here. And even trying to train someone into the role of acquisitions can be challenging because you've got to have an eye for it. Exactly as you said.
An eye and an ear and a sense for it, because you can probably work out pretty quickly, it's no good.
And because you don't want to say goodbye to an asset that might look like it has a few hairs on it, but really it doesn't. It might be actually a really good opportunity.
I've been a client. I am a client of Rethink, so I've seen the team do this. But you do a thing called a write-up or something or other.
Yeah, a property write-up.
A property write-up.
So first page, for me especially, is a bit of a warming introduction. So it just tells a little bit about where the property is located, the size of the building or the strata unit, if it's freehold, if it's strata, the type of asset class that it is, the tenant in there, how long they've maybe been there for, how long they've been in business, what the lease is. And it's a really, really high-level summary about, 3 paragraphs long, short paragraphs. And then I would then go into the price and the yield. That would sort of all stay on the first page. Next, look, depends on the type of property. Some things can change, right? But then I really like to do some key highlights. So if, for example, you're at work and you're reading a property write-up and you don't have time to read an introduction, just, go through to the second page and just have a look at the key points. So good location, good tenant, good lease in place, the growth for that area. They're just really quick little key highlights. Always photos would then come in. So once you've had a bit of an understanding of what the asset is itself, then being able to see it, or sometimes we might have a lot of photos, sometimes we might not, especially if it's off market, the photos aren't going to be as pretty. So please withhold expectations there. And then I would have a bit of a lease or a financial summary, or, some tenant profiles. So a bit more about the tenant in more detail, financial analysis or a lease overview. Then next, I would do a bit of a suburb profile. So if it's in a location that any buyer doesn't know much about, for example, if it's in Mackay, I know a lot about that region. So I would put a lot of, key statistics and facts in there about, hey, what is Mackay? What does this area look like? What's the upcoming growth? Then probably from there, I'd do a rental yield calculator, which is from the website, and just to show you a bit of a forecast of this is what the property, is going to be performing like in the next few years to come. Yeah, it's pretty detailed. I've pretty much got everything.
And one important point is when the write-up's sent to a client, it's got a price on it. That's the negotiated price. So if it says $2 million, that's not the asking price. The asking price could have been 2.3, 2.4. we've already done some pre-negotiation or even fully locked it down, depending on where the asset is, off market or on market. And then we do the spreadsheets based on that number. So the client with, what Krystal mentioned, that detailed breakdown has the numbers, everything they really need to know to make a decision on the property. And then if they're happy with it, then we go into the due diligence, and then it's there to verify everything. So our job is to then make sure all the insurances and outgoings and leases are exactly what's presented. So that document's super important. It's basically it's the product of Rethink. That's what we're giving you. And that's the yield you're getting and the exact cash return. The only things that change after that are basically your interest rate and, if there's potentially little differences in the lease, and that's where the price adjustments may have to happen. So,
and imagine it's also a tool for you to actually orchestrate the deal or get the deal done, because you put that in front of a client. The client, for whatever reason, might go, it's not right for me, or things have changed. I've got this going on.
Yeah.
So it helps you actually get an answer pretty quickly on a property, because you'd always have more clients than probably properties, I would imagine.
The quickest way to value a property, I think, because we know the cap rates just through our own heads doing it every day. The hardest bit is getting the rental rate. If you go look at where we're sitting today, what's this office, you can't just Google the square meter rates. And then are those rates based on gross leases or net leases? You've got to really break down those numbers. But we've stored thousands of valuations and just our own market research through all the property managers we spoke about. So we can quickly get that data. So if a client calls me up 3 years later and say, what's this renting for? We just go to our due diligence team, see what data they got for that area, and you fast track the results really quick. You can't get this stuff off the internet. So anyone who's buying a commercial property, the biggest tip is make sure you know where the square meter rates are. If it's high, is it high for a reason? Is the fit out superior? Is it got a great view? Is it, a really functional space with high foot traffic? I don't know. There's always a reason something could be high, especially in retail, which we'll go into more. If you're next door to Woolworths, it might be 2,000 a square meter, but down the back alley where there might be a little old hairdresser paying 400 a square meter. That's how much it can vary. Even,
it's relative.
10 meters apart, the buildings could be. So, that's what we go into. We have a cash flow diagram that sort of extrapolates over 10 years of increased rents and keeping interest rates steady. But you can see the growing nature of the return, which is important. The best pitches we can come up with. A lot of this information is supplied by the vendors, so we've got to cross-check that. Krystal mentioned. Krystal's got the experience of 400 or 500 million in purchasing, and when you get to that level, and this is something she does very well, is you know when to save your legs on a deal. You can see the too hard basket because they've missed all the things, or the building's a bit too old. It may look good because the yield's good, but we know they're going to crash in due diligence, so you just walk away from them. We still have a crash rate of maybe 10% with deals. So we do crash.
So when you actually choose, hey, we're in on this, you advise your client this is worth pursuing, considering it's time to start spending money. You reckon 10%?
I think so. It's about 10%.
I calculated mine the other day, actually.
Yeah.
So 92, 93% of a settlement rate. So from contract to settlement, only 6 or 7% at the moment over 3 years have ever fallen through. And usually those times, we've had one, and it's usually for the most absurd reasons. That's like there is nothing anyone
What's
could have
the most
done.
absurd reason that you've never sort of proceeded with the deal?
Crashed out of principle because I knew they'd come back later. Like they just screwed up the insurance, a similar one. And this was a fund management company. It was Krystal's deal. It was a shopping centre, quite large one. And they
settled that.
Yeah, we settled, but we crashed it initially. So because they promised they would match the yield because they knew the insurance would blow out, because they had one of those group fund manager deals where they just insured a whole portfolio. Yeah. So we looked at it and had like $6,000 insurance on a shopping centre. I'm like, that's not going to work. It's probably going to be 50. So are you going to honour that? Because we're going to go in now. Please honour it. And then they didn't honour it at the end. And it was a combination of just some corporate heads getting together and trying to play hardball. So I said, we're crashing. I said to the client, and Krystal was a bit angry at me at the time.
No, it was not.
No, the agent was. That's right. And I was just like, I said, client, do you trust me? He said, we're crashing today. And he's like, I don't care. Let's just settle. And I was like, no, we're going to get this because they're not going to lose a deal. But they've put it in writing and they're just going to look like dickheads if they don't agree to it. So we crashed. We rescinded the contract. But then the next day, they saw that we were...
So you formally rescinded the contract legally? Yeah.
And we sent the note in. We had to crash because 5 p.m. deadline came up, and they were always going to patch it up later.
So
we were
this
so
is
far
negotiating, right? You can use this as a
so it was just a silly thing, like just egos. That's all that was. Really, that shouldn't have happened, that whole conversation. But
I remember
90%.
one time, and it was when the interest rates, when the interest rates just started going up, it was probably 2 years ago, and we had a valuation that came in short.
Yeah.
And it was just when the market was shifting and the data wasn't there to support a val, and that killed me.
Yeah, because and this is all vals are stacking up generally now because prices have been steady. So, there's a lot of data out there. But when a market rises, especially
and
in commercial,
like massively.
You're setting record prices.
Do you think it's going to be just at that point, if we move into a rate environment which is decreasing, prices should start increasing? How big is the lag between real valuations and valuations?
We should both answer this.
I think.
Yeah. I think 6 to 9 months.
You reckon 6 to 9?
Because it takes 60 days to sell a property and then under contract for a couple of months plus, and then, allow another few months for the data to show up properly.
I'd say that after 3 months, like so the banks are dropping their rates, and that's when you start to see a bit of a shift in the yields, and then there is a flow-on effect, which would probably match up to that anyway.
So it takes longer for the market to catch up compared to resi.
Yeah, but it's just the data lag. Like prices will be set.
There's a lot less data, there's a lot less transactions. That's the issue.
Yeah, exactly. So within 3 months, people start paying more, but then it takes a lot longer for that to hit the books.
So back to the idea of what differentiates a good and a bad deal or asset. How much of that is checklist versus instinct?
I probably have 2 main checklist questions. Flood zone or not? That is the first and most important thing in the
Don't touch anything on flood zone.
No.
Never.
Oh, no. Yes and no. It depends. It depends on what council's flood mapping is, how long ago it was updated. There's other things that even go into looking at flood mapping, for example, but they're probably the 2 main key metrics. So whether it floods or not, has it ever flooded? What's going on? Is it covered for flood under insurance? And then the rental comparisons. Everything else, and I'm quite visual when I look at a property. Like an agent would call me and say, hey, got this one. Like, just tell me the address. I need to look at it on Google Maps, or I need to drive out there and see it, or whatever it may be. I need to visually look at it. And then that just then brings on a whole other list of questions that coming up in my head. And then,
And that's smart, because as much as we say commercial has no emotions, clients still want to see something that looks decent. You're not going to just buy it because it's an 8% yield. If it looks like a bomb, it's not going to sell. So it's got to really pass the common sense visual test as well. So that's one of the things I've always mentioned, like in our education course, like tip, if you want to find a property quickly, you've got to actually look at the photos. Then the yield needs to match those photos, and then you've got to do all the checklists.
The location too, like looking around and saying what other tenants are nearby, or because that's a massive, like if you, for example, I could give so many, but if you had just like what you said earlier, right? Like just around the corner and like a shed, there's a cafe. The cafe needs exposure, and you need a good operator to be in there. So if you had like a cafe sort of down a back alleyway, it might be like a really good yield and the rents might be cheaper, but looking at that, how long could that stay a cafe for and continue operating successfully? Like, will you have a high turnover? There's a lot of different things. That's why that address piece for me is so important, because I need to see it and see what's around and then make a judgment call from there.
And I guess the challenge is it's a real dance, because you've got someone probably wanting to try to sell something quickly. You've got to
someone in experience too that's doing that. I'm like, what? Why are you doing this?
And you need to buy time so you can make a considered decision whether or not it's worth pursuing this and start spending money on it. So, how do you maintain control of the negotiation? Because imagine you want to be in the driving seat.
You just get quicker and smarter. So being able to make a judgment call so quickly is critical. Otherwise, we'll lose these deals.
And the other option is like you just lose it. We do a very high percentage of off-market deals, and I know what the ones I work, because I'm, as I said, on the coalface doing this. I'm not going to put my time into an EOI campaign where there's 50 people. Like, let them have it. I want the off-market deal where my time's protected. I'm going to have time to answer all the questions and get them to my clients. And then we've got like pretty much 100% chance of securing it if we match up with the vendor's expectations on price. But yeah, when I get like, especially some of the agents in markets where they normally do auctions, like as soon as I see auction on it, forget it. I don't want that.
And this comes back to control then. So what we've been talking about is how do you assess whether or not it's a good asset and then the process of securing it. But the other part of it and the important part of it is actually finding properties. So you don't want to operate where everyone else operates, right? You want to operate where no one else operates, and that's finding properties for sale that no one else.
And that's where the relationship is so important. And you get the relationship by two ways, like just delivering on what you say. So you don't, there's people out there that will put offers on properties and there's no client to back it up. That's the quickest way to piss an agent off. And the other way is, you got the buyers and the volume and you can move quick and smart. Like you just got to complete a deal, because what's the agent want? They just want to get their commission. And they want to do it as a little effort as possible. Like we've got a very thorough due diligence process, and it's probably another thing that can piss off agents a bit, because we ask so many questions. And if they're not used to the due diligence process, it can burn them to a degree. So there's a bit of an education process to say, look, as long as what you present is exactly what you say, we have no problems. If you miss things, we're going to come at you for a discount. But it's not because we want to. It's just because the clients are going to be, they're expecting a yield. And if we don't get that yield, we don't look as good to them and they don't make as much money. So
what do you classify as off-market? Because most commercial transactions would have some sort of agent representing it. So you're talking about properties that never hit platforms. Exclusivity before. So exclusivity to conduct a transaction before it goes to the open market. And I can see the value in that. So on that basis, then you're paying market price for property. So, in resi, it's all about every single buyer's agent
it's a race.
Right, finds off-market deals and under-market value, which I don't think really, it might be off-market, but
it's a sales pitch.
It's a sales pitch, right? So you're going to be paying market value for properties because that's the price that you settle on.
Yeah, you might have an advantage in the rents or something like that, but there's outliers. I think we brought one up. The first podcast of the year where it was under rented, a resi sales agent was selling it. Like we got that thing 50% undervalued, but that doesn't happen often.
But also, if I may, so it depends on the purpose of sale, which is another one of those questions that we ask a lot. So if there's a vendor that, for whatever reason, they might be going through a divorce or they need to sell it or something's happening, that's where those opportunities come into. There are properties under market.
Yeah.
It's just, I guess, the reason for sale and off market. Like an agent would come to us and say, I need to get rid of this ASAP. Okay, here's the price. Like, let's go. And it's a win. Like, it's a win.
Yeah, it's a speed of the deal. And you see it in resi buying. I don't know if you've found this yet, but a lot of agents start to get, it's quite a topical thing to say, they start to get fatigued working with buyers agents, right? They would rather sell to an investor that's not represented by buyer's agents. They probably don't have the same level of skill and sophistication. They make a deal a lot more complicated and complex because of the integrity of the transaction. So a lot of agents would rather go, I'll just try and sell it out direct to someone else. Commercials, no doubt, a little bit different around it.
I guess individuals can be a lot more difficult because they just flip and flop during the deal. Sometimes they can be unreasonable in their requests. They buy a 30-year-old shopping centre and they want every hairline crack on the entire property structurally inspected and fixed. Like that's not going to happen. That's just someone needs to talk to them, or if they're not an engineer, or that depends on what they do. But yeah. Vendor, I guess it goes both ways. You could get some overseas investor who doesn't even care and just does a cash deposit for a shopping center again. Or you could get someone who's just spending their life savings and they've flipped and flopped on 20 deals in due diligence and they're not going to complete. So at least with us, there's a 90% chance of it settling, or 94% with Krystal. 94%. That's the difference. And they will want to work with someone like that, because especially the higher the price point, the more you need to vet the purchaser. It's an interview process. They don't want to tie up a deal for 3 months with someone they've never seen that's done a transaction at that level. So that's our advantage there.
I guess it's a huge advantage because they know you've got people ready to buy. You know what you're doing. You're not going to be unreasonable. You're experienced and you know how to conduct a deal? Because no doubt, Krystal, you find agents who you just go, this person has no idea the depth. You want to be doing business with people that know what they're doing, because everyone wants a fast transaction that creates value on both sides.
Yeah, and over the years, it's just like, no more, not again.
No.
You're quite wound up.
Have you got your own agent blacklist? Have you?
No, I wouldn't say to blacklist, but they're people that I'd prioritize over others, and it's also they come with experience. They're really good at their jobs as well. I wouldn't say blacklist. I think I've given Scott an agent from my list. Can I put him on your?
A lot of commercial agents listen to this right now. This particular podcast. What makes a good commercial agent?
Transparency. If you ask for information, especially if it's off market or on market, let's just say I look at the outgoings and there's insurance seems really low. Calling an agent and, hey mate, I need a copy of the insurance ASAP. They would go and get it, and it just works to and fro. Or if I've got questions about some, let's just say for a retail centre, and some tenants have been there for a while, some others haven't, being able to call the agent because they know a lot of the information about the property. They've already vetted and sourced that information with the vendor themselves. They can either answer it on the spot or they just get it straight away. And they're the best agents to work with.
And when there's no agent involved, it's a lot harder. So you need them.
They're the interpreter in the middle of it.
Yeah.
They're good to work with. As long as you have, you pick and choose what agents you want to work with, and being in the industry for a while, I've managed to do that. And that's when you said before, what about my job? I get to have fun in a little way.
How do you communicate? Text, phone, email, all on Sunday?
I usually just pick up the phone and call. So much easier. I want an immediate response. I'm not just going to sit there, send off a nice email and then wait for a call back. I pick up the phone straight away. So a lot of the time, as you know, I'm hard to get on the phone because I'm always on the phone. Just, I need this information. I need this. Okay, send that off here. Do this. Or
imagine it's tough, and because you always got to prioritise a deal going through with the immediacy of the speed.
Without question, yeah.
Do you spend much time now, sort of wining and dining agents and making sure they think of you first?
No, I'm always, and a lot of people disagree with me because that's important. But we just get the job done. Yeah. That's why getting their commission paid is what really gets them out of bed, not chatting to me over dinner. But it's a hard thing to manage. I think you can effectively properly manage maybe 25, 30 agents for each buyer's agent. Yeah. Maybe more, maybe less. It depends on how kind of thorough you are. But that will give you 30 agents sending you properties. So, that's how I was, structured Rethink, the business. We've got acquisitions people in Perth to Townsville to many in Southeast Queensland, Melbourne, Tassie, everywhere. We're all over the place. And they are still outnumbered by agents, hundreds to one, maybe even 1,000 to one. I don't even know the stuff.
Do agents much, the inverse of what I said around some agents just want to deal directly with the investor.
Yeah.
Those agents that want to work with resi buyers agents, is there, do they actually see tight, strong relationships with buyers agents as a big driver of their business growth?
It's different in different areas. So Southeast Queensland love it. Because they've had the buyer's agent experience for a decade. Melbourne, we've put a few people down in Melbourne. That's an education process. So there's more wining and dining needed there because they haven't dealt with buyer's agents buying $5 million industrial assets because there hasn't been anyone in that market. So same with Tassie, but we've got very good, strong connections down there. Mark in our team covers those areas, and Tim and Ramsey, they're all sort of in different asset classes and looking at different price points. So they've got their own specific agents to work with. And there's not much overlap there, but they get to deal with the one person each time. And that's important. And it gives you the off-market deals. It gives you the priority. And once they realize that we're sort of doing their job for them in terms of managing the client and helping the transaction go through, if it's at the right price, they love it. And then next deal, off-market, so they don't have to, waste 60 phone calls. I was talking to some Ray White agents. They put a Hungry Jack's up on the internet. They had 702 inquiries. So they come to us.
That just sounds like hard work, having to deal with 702 inquiries, because every single person is going to require a response, because if you don't give them a response, they'll put a Google review on you saying that you're not doing your job properly.
Yep. So there's a team, or, even if it's offshore, that you've got to go back via text or whatever. And then that's why they've all got giant databases as well, because hundreds of people reach out on every good property.
So Scott, you said that you sort of have specialists across the country who work with a cohort of agents, which sort of makes sense, and I get the understanding of that. But where do you operate, Krystal? Where's your sort of specialised area?
I pretty much operate across the country.
Okay.
Primarily transact Queensland, especially Southeast Queensland, a lot in Mackay at the moment, SA sometimes, and New South Wales.
Okay. And which of those markets you sort of most have the best sentiment?
Probably Queensland.
Okay.
That's where my strongest area would be. My next strongest would be New South Wales and WA, between those two. South Australia, I've only done a few sort of properties there. And another one's ACT. But that's not as common,
So
really.
you're not playing a lot. You can do most of your work sort of over the phone and
over the phone.
Yeah.
Because we do so much in Queensland. There is a reason for that as well. Like just the other week, I went out and saw a retail centre with one of my colleagues in the buyer. So most of the stuff I can do from my beautiful Gold Coast home.
Yeah. So you're on a Gold Coast, are you?
I am.
Oh, so for some reason I thought you were in Sydney. Okay. Couple of real quick questions. One, this is from our listeners, and this is out of info@rethinkinvesting.com.au or on the DMs through all the socials. There's one here, Scott, very current, with a RBA rate cut. Should I wait for better borrowing conditions, or is now the right time to buy?
Early movers always benefit the most from every cycle. So waiting, you're just going to miss part of the growth curve. Who cares about your interest rate? If you can get the loan, you go it. The biggest question is your budget going to be big enough to buy what you want? If not, that's when you wait, or then maybe invest in a different asset class. But yeah, I'd never really cared too much about what the interest rates are today, because they're not going to be the same next year or the decade ahead or the next 30 years. It's just today's rate. So yeah, if you can get the loan, go for it.
Okay. One for you, Krystal, very relevant. What advice would you give to women looking to break into commercial property investment?
Go for it.
Yeah. Just do it.
I guess in yourself with as much knowledge as you possibly can, get comfortable and great
Any particular
industry.
area to start, do you think? I imagine, you've got a skill base and you've developed your sort of professional acumen over many, many years. Where would it be a good spot to start for females looking to crack
I think
into commercial?
it just depends on where your baseline knowledge sits, right? If you know a little bit about, say, residential property to begin with, maybe listening more to commercial podcasts or reading up about this. And that's another thing too, is, there's not much commercial education out there. So you've got a commercial education course they could do, but I guess speak to someone that does know commercial, even speak to a lot of male commercial agents and just try and get as much information as you can from them.
It feels to me as an outsider, a very collegiate industry. If people are in there willing to give it a crack, people will help them out.
Absolutely. Yeah, especially myself. If there's someone that wants to start out, it's exciting because I get to, I guess, showcase the knowledge that I've gained over the years. And I sometimes forget how much I do actually know until someone asks me a question. Oh, yeah.
Yeah, there's three main commercial career paths. There's one like acquisitions, which is what Krystal is. So you've got to be most technically skillful there. So that's where Krystal's background in lending and obviously previous buyer's agent experience was very helpful. You've got to be very good at negotiation. So not everyone likes dealing with that because it's quite confronting sometimes. And you're up against some of the best negotiators in the world in commercial real estate. So you've got to know what you're doing. If you don't know that, then maybe, and you're technical, the due diligence path is the other one. So that's more like your analysis type. You don't want to be out front talking to people, but you're still technically strong. It's a great area to get into. It's basically, it's where the brain's trust is to protect the way I look at it, it's the safety net of the business. They're the ones that ensure that no deal bad goes through. The other option, if you don't have the skills in terms of 10 years dealing with commercial loans, is sales. So that's your buyer's advocate route. So we've got an example. Jamie, she started as effectively a receptionist for us and then moved into residential buyer's agency work, smashed that. She had 10 years selling cars with Audi and stuff like that. So brilliant salesperson. And then eventually just started doing commercial deals. And this is over a 5-year period. And yeah, she's doing large deals every day of the week now. Well, not every day of the week, every week, and multiple per month. And yeah, doing very well. So sales, due diligence, or acquisitions.
So my very simple way I frame things, it's finding deals and negotiating them.
Yep.
It's assessing deals, or it's finding customers to do deals for.
They're your three paths.
There you go.
Yep.
That's pretty cool.
Yeah.
I think I haven't heard it framed that way. Yeah. Well, thanks for coming in, Krystal. Are you back on a plane today, or you're hanging around
I am
doing
this
other things?
afternoon.
Yeah, okay. Well, thanks for making the effort to come down and having a chat with us. And, we've met beforehand and sort of seen the depth of Scott's team, and you're very much sort of the exemplar for how I think people can craft a role inside of commercial real estate. So keep up the really good work.
Oh,
That's really, really good. And Scott, always good to catch up, mate. We've probably got to drill down on some asset class stuff soon because things are changing. People always need to know or want to know what's happening in retail, they want really tactical level sort of discussions around it. So maybe we can pick that up next time.
For sure. Yeah, keep the questions coming through. Shoot them through Instagram or just info@rethinkinvesting.com.au. And love the feedback as well. And we're always looking for the next topic to cover. So that's why we based those last 2 podcasts on ownership of property. That was based on client feedback. So keen to hear what we should do next.
And one favour for me, Scott, we don't ask for a lot here, but keep those reviews coming wherever you tune into this. There's Spotify or on Apple Podcasts or whichever player you use. Me and Scott actually get to sit and talk about that, but there's a lot of people behind the scenes who make this podcast come together, so they get a real kick out of knowing what they're doing is actually creating a lot of value. I get stopped. I was at a thing just the other day, and someone said, "Oh, Phil, commercial property." I was like, "Wow, you forget how many people tune into this." But
famous.
Maybe you're the famous guy. I'm just a bloke trying to have a chat with you. But have you given us a review yet, Krystal? No.
I haven't.
No. See, there we go. Well, you'll be the first to do it, and
you haven't had me on here yet.
No.
So
First thing you can do after it. No.
Give yourself a review now.
Give yourself a review. But
don't make me do that.
Tell your friends you can like and follow the podcast, and info Rethink Investing is where you can get the details. Scott, thanks for coming in.
Thank you.
Krystal, we'll see you again soon.
Thank you. Yes.
And that's Inside Commercial Property for this month. We'll see you next time. Until then, bye-bye.